Western CPE is keeping you in the know this tax season with our Federal Tax Update program. Whether you choose to attend a live update, a convenient webcast, or take a self-study course, we have the format that works for you.
I'm Sharon Kreider, and today I have the pleasure of talking to Karen Brosi. Karen Brosi is an enrolled agent and a certified financial planner in Palo Alto, California. She's been in practice 20 years. Her specialty is high-income individuals. And as you could imagine, Palo Alto sits in the middle of Silicon Valley, so high income is pretty darn fancy in that area. Karen is a California tax expert. She is a featured speaker for Western CPE's Federal California Tax Update. She does 14 two-day seminars with me.
You.
With me. So we hope that we've seen you there before, but right now I'm going to ask Karen some questions about an annoying, ridiculous topic one more time. Karen. Hi, Karen.
Hi, Sharon.
So let's talk about alternative minimum tax.
Absolutely.
Now that's a tax for the rich, right?
Would that it were so. That was its original intent. You do know that the alternative minimum tax is more than 40 years old because it was hatched by Congress in 1969, and that was exactly their intent. Their intent was to say there are certain high-income taxpayers, because of the level of their income, they can take advantage of more deductions in the tax law than the rest of us poor slobs can. Therefore, they're ending up paying no tax, even though they have a lot more income than everybody else. So we need to fix that. So we'll devise this alternative tax system that will add some things back in and tax those wealthy people. Who were those wealthy people in 1969? Well, it was 155 taxpayers with income over $200,000. And you know, I bet you and I could agree that a taxpayer with income over $200,000 in 1969 dollars was pretty darn wealthy. If we did nothing else but inflation adjust that $200,000 into 2011 dollars, that number would be somewhere closer to $1.5 million. So let me turn the tables for a minute, Sharon, and ask you this. Are your taxpayers with ordinary income of $1.5 million paying AMT these days?
No.
Are your taxpayers with income of $200,000 paying AMT these days?
Yes.
Absolutely. And that's what the problem is. It's no longer a tax on the wealthy. It's a tax on the middle class. Well, in some cases, we'd call that the upper middle class. But it's a broken system that no longer even taxes the wealthy. It's really taxing the upper middle class.
So Bill Gates does not pay AMT.
Unlikely.
And
Warren Buffett does not pay AMT.
Why not?
And the reason is the mismatch between the way the alternative minimum tax has been designed for us, which is it's a stagnant system in the tax law that provides two tax rates, 26 and 28%. So the most my income can ever be taxed under the AMT system is at 28%. The regular tax system is a fluctuating system. It's a graduated tax rate system under the regular tax, but it's also a system that is indexed for inflation, that has marginal tax rates that have changed over time. What's the top marginal tax rate today?
35%.
Compare that. That's my ordinary income. For a married couple filing a joint return, I get there to that 35% tax at income of around $350,000, say. So that means if I am the wealthy, earning $1 million or more of ordinary income, I am being taxed on that ordinary income under the regular tax system at 35% and under the AMT at 28%. So am I subject to the AMT?
No.
I'm paying regular tax.
Now I know we've had the AMT tinkered with, patched is the word.
Yes.
But we've had some tinkering with alternative minimum tax the last few years. What's the prospect for a patch into 2012?
Well, the interesting concept of this patch And we've been living with the patch since the original Bush tax cuts in 2001, because it was the original Bush tax cuts that did this, that dropped the lower marginal rates, or the top marginal rates, and left the AMT to be stagnant, and as a result was causing this middle class to become more and more subject to the alternative minimum tax. The way to fix that Congress determined would be a way to fix that, would be to allow a larger exemption amount, more income not subject to the AMT. Now, they did that on a year-by-year basis generally throughout the first decade of the 2000s. On a year-by-year basis, they would determine what the appropriate exemption amount for AMT is, what we call the AMT patch. And then it would only be good for a year, and it would expire and drop back to its pre-2001 levels. Now, sometimes Congress did that early in the year. Twice, notably, in 2007 and again last year in 2010, Congress did it very late in the year. So when they did it late in the year, they gave it a 2-year patch. They did this year's and next year's patch. It expires again at 2011. What's the chance that we'll get another patch? Oh, I think the chance is very good that we'll get another patch, because here's what happens without it. Currently, and statistics vary from year to year, roughly with the patch and the current regular tax marginal rates, around 4.5 to 5 million taxpayers. That's roughly about 5% of American taxpayers are subject to the AMT. If the patch expires in a year and is not renewed or reenacted, that number will rise to 30 million taxpayers, or virtually 1 in 3 will find themselves subject to the AMT in that year. Congress can't afford to let that happen from a purely political standpoint. So that's why the patch each year. So to answer your question, will we see another patch? Almost assuredly. What would prevent us from seeing another patch? Well, about the only thing that politically could prevent us from seeing another patch would be a complete elimination of the AMT. And the chances of that happening are less than slim.
I agree. I agree. Less than slim. Tell me what my client can do to minimize AMT.
Well, that's the hardest question of all, isn't it? Because that's what the client wants us to do for them. The client says, get me out of here. Make this go away. I don't understand it. I don't know why. It's just not my regular tax. What is this AMT? Make it go away. The problem is, and we're just truth-telling here, I probably can't do that. I probably can't plan my client out of the AMT the way it's structured right now, and here's why. There are nearly 30, it's between 25 and 30 preference and adjustment items that go into the calculation of the alternative minimum tax. But there are 3 in specific that are the 3 primary reasons that an American taxpayer pays the AMT. The first one, the biggest one, is the loss of the tax deduction that they get on their Schedule A. Not allowed. Taxes are added back in for purposes of calculating their AMT. The second is the loss of their personal exemptions. AMT doesn't care how many kids you have. It just gives you an exemption amount based upon your filing status. So if you have a number of dependents, that all gets added back into your taxable income for AMT purposes. And the third is the loss of miscellaneous itemized deductions. So that almost adds insult to injury, doesn't it? I don't even get to deduct those miscellaneous itemized deductions under the regular tax unless they exceed the 2% AGI haircut. And then, even if I get there, we just add them back for purposes of calculating the AMT. Now, those are the 3 biggies. And when they're ranked, and they're generally ranked by Congressional Budget Office of taxpayers, the most taxpayers who pay AMT because of these, it's roughly, and it changes from year to year, 70% of all taxpayers who are in AMT is because of the loss of their tax deduction, their state tax deductions. Roughly about 19% are in AMT because of the loss of their personal exemptions, their dependent exemptions, and roughly about 11% are there because of the loss of their miscellaneous itemized deductions. You're pretty good with numbers, my friend. Add those three, 70, 19, and 11%.
Is that 100?
That's 100%.
Right.
So if it's those three reasons that are causing, call it virtually every taxpayer to pay AMT, what's my best planning idea?
Move.
To Nevada.
To Nevada. Move out of the state so I don't have state income tax. Don't tell my children I moved, and quit my job so I don't have any miscellaneous employee unreimbursed expense. What do you think?
Perfect. And how's that for a great planning idea?
Not
Yeah,
so good.
and what I like to say is, I like that approach. What I like to say is, what am I going to tell the taxpayer? I'm going to tell him not to pay his state income tax and to get rid of the kids? Can't do it. So it's not an easy answer. I don't know how to. In fact, in a lot of cases, there is no way under the current AMT system to plan out of the alternative minimum tax.
Can they fix it? Can they fix it?
Can they fix
Could
it?
they patch it? Could they, I don't mean patch like, is there some way to get out of this every single year we patch it and get into something that just, even if we can't repeal it, sort of band-aids the problem and makes it less?
On a little more permanent basis. Absolutely. And in fact, in early 2010, Congress received, Senate Finance received a report from the Congressional Budget Office on specifically how to fix the AMT or how to correct the problem with the alternative minimum tax. And CBO actually offered three potential solutions. Now, Congress has not acted on any of those in the low 20 months since they were presented with them. And how likely are they to act on them? I'll give you those answers as I give you what the three suggestions were. Of course, suggestion number one was simply eliminate the alternative minimum tax. Congress can't afford to do that. The current projections are over a 10-year period of time. If Congress was to repeal the alternative minimum tax entirely, let the Bush tax cuts expire as they are due to expire at the end of 2011. Over 10 years, that repeal of the alternative minimum tax will cost the U.S. government somewhere close to $800 billion. If Congress was to repeal the AMT and at the same time make permanent the Bush tax cuts, the 10-year cost of repealing the AMT will be closer to $1.4 trillion. So they can't afford to repeal. So CBO recommendation number two, make the patch permanent and index it for inflation. Now, that would cost over time, but the issue there is they've been patching it for 10 years now. So what's the harm? They've managed to find a way on an annual basis to pay for the patch. So let's just make the patch permanent and index it for inflation. The problem why Congress doesn't do that has to do with a little funny math that they do in Congress when they enact tax legislation like that. By putting in the patch each year, the only cost they have to cover for that is the 1 year lost revenue. They get to pretend that future years' revenues will go up again because the patch will expire. If they make the patch permanent and index it for inflation, the year they enact that, they have to recognize all the future lost revenue and find a way to pay for that. And they don't know how to pay for it. So it's almost the same answer as repeal would be to make the patch permanent and index it for inflation. They can't figure out how to pay for it. Now, maybe the super committee will find a way to do that going forward. Third and final recommendation is the one that I'd really like to see Congress give some serious consideration to, and that was overhaul the system and simply take away some of those big gotchas. Allow taxpayers under AMT to deduct certain things that just make sense for middle and upper class taxpayers, like our personal exemptions, like some taxes that we pay, like the property taxes on our homes that we own, certain miscellaneous itemized deductions. So just overhaul the system to allow for the deduction in there of certain items that actually make sense. That's where I'd really like to see Congress go. That, of course, will take a lot more political movement, I think, and agreement than is possible in Washington today.
Karen, You gave me a headache.
I'm sorry.
Right.
Yep.
on alternative minimum tax. We've been visiting with Karen Brosi. Karen Brosi is an enrolled agent and a certified financial planner in Palo Alto with 20 years of experience with taxes. And both Karen and I are tired of alternative minimum tax, but no more exhausted than our clients are of the AMT. Is there any planning opportunity? It maybe is just planning where to get the money from to pay your AMT. So thank you, Karen, and thank you for being here.
Vern Hoven is part of Western CPE's live federal tax updates at 32 locations across the United States. If you can't travel, we offer convenient webcasts broken into 4-hour sections. Also, our renowned DVD collection featuring Vern Hoven allows you to stop and start your federal tax update on your own schedule. Your CPE, your way. Visit us online at westerncpe.com or call 800-822-4194.